Hello traders, it is Wednesday, October 23rd, and I'm going to do a recording instead of doing our live event. We ran into some technical difficulties, so I'm sorry about that. Watch for our live event next Wednesday. We're going to start with a review of my previous pick in the last live event. That's how we do all of these videos. I'm giving you free analysis. I'm giving you free picks. I'm trying to teach you a systematic trading approach. If you like this content, please help me out. Give the video a thumbs up and subscribe to my YouTube channel. It's going to help me reach more traders. That's my goal. I make probably $200 a month on these YouTube videos. Doesn't even cover the cost of my thumbnail. So I'm not doing this to generate a lot of money. I'm doing it to educate you. So let's take a look at the last pick that I had, Lulu, L-U-L-U. And you can see it right here. This is last week, Wednesday, right in here. And the stock dipped. It had a nice dip. I'm going to get into a really good question that I had from a trial taker earlier this week. Had this nice dip in here, and our goal was to buy dips. So I set an alert, M15, buy signal. You can see it went into a sell signal, buy signal here. Beautiful move. That was from about $290 up to $305. Lots of profit potential in that trade. But the key was that you have to buy dips. That's been the theme all along for about the last month because the market has been chopping around. We're going to take a look at it in a bit. This is the 5-minute chart of the SPY. You can see how it's gradually been drifting lower today. And we'll take a look at the daily chart very quickly. And there you can see this is just a big compression right in here. Lots of mixed overlapping candles. The market is not doing much of anything. Let's take a look at LULU on that daily chart, that D1 chart. What got me interested about this stock? Well, we had a cup and handle formation there, really coming into play around that high minus trend line with a nice little breakout above it, also above the 100-day moving average. That's the blue line right there. So the stock pulled back, it tested support, found support at that EMA 8, and now it's off to the races. And you can tell from the chart, it's herky-jerky. Even though it's trending higher, there are plenty of pullbacks, and that is why we buy dips. If I look at the 5-minute chart or even the 15-minute chart, and I zoom out, look at how choppy this thing is, okay? That tells you that you do not need to chase breakouts on it. Wait for pullbacks. It's in a choppy grind higher like most stocks right now. And the problem is that if you come in all hot and bothered right in here, I did that live event on Wednesday and you thought, Pete said, buy Lulu, it looks good. And you bought it in here and you didn't wait for the dip. Uh-oh. Pete's pick sucked. It wasn't any good. So you take a nice big loss right in here. And then when it's time to buy, you've already looked at this and gone, oh, I'm not going to fall for that again. I'm staying away from Lulu. And then the stock rallies up. And now you're thinking, gosh, I should have bought that. And then you're probably long up in here, and then the bottom falls out again. So you have to buy dips. One of the problems that traders have is that they see a really good D1 chart. And I mean, this thing looks fantastic. Every single checkbox, marked. They love the D1, and they're thinking, man, would I like to buy a dip on this stock? So then they finally get the dip, and then they look at this little temporary weakness and they go, oh, I don't like it so much anymore. Boy, I'm glad I waited for that dip because it doesn't look so good anymore. So they find reasons not to buy the dip. That was their game plan from the start. They loved the D1. They were waiting for that pullback. They got the pullback, and then they convinced themselves, no, I think I'll take a pass. And then it does exactly what they thought it would. So when you get those pullbacks, obviously you have to wait and watch for support. And once you have that support, then you need to have confidence that your initial D1 analysis was good, that it was concrete, and that this support level is going to pave the way for a move higher and that your entry price will be really, really good. And that's exactly what happened with LULU. You can see how the stock did have a pretty big drop. And this turned out to be a bearish engulfing candle. So the question that I got from a trial taker who probably was long Lulu up in here was, how do I know when this bearish engulfing candle is the real deal? So D1 chart, that's it right there. This is when the live event came out. So you get this big, long red candle. Uh-oh. This is what spooked some of the traders. They didn't want to buy it here because they thought, oh, this is a bearish engulfing candle off of a relative high. This is what I need to pay attention to. This could pave the way for a bigger retracement in here. Well, what your focus should be on is this trend strength in here, these preceding candles in here, where you've got this nice move above major technical resistance levels on what? On good volume. So this is not a little mamby-pamby head fake breakout. This is a nice breakout in here. After 4 days of decent buying, after 2 weeks of decent buying, you're going to have a little pullback in here. I mean, that's what the stock does. It doesn't go straight up. So you get this pullback in here, and now you start finding support at that low and at the EMA 8 well above the 100-day moving average. Never gets close. And now you start creeping higher and recovering that red candle right here. The other thing that you want to keep in mind is, what did the market do on that long red candle? Was this unique to the stock? Meaning the market went up that day? If that's true, then you have to be a little bit more cautious because the stock could be losing its relative strength. But if on this particular day the market was also down, okay, well, that's probably why the stock sold off. It was a little bit ahead of itself. This is a little bit of profit taking. I'm going to watch for this rebound in here. So let's take a look at what the market was doing that day. Long red candle on October 17th. Long red candle on October 17th. Okay, off of a new relative high. Whoa, I wasn't trading that day, but I'll bet you it is a bearish trend day with a gap reversal. So we're going to go back and look at October 17th. Sorry about that. I'll scroll back. And there it is. So this is what Lulu did. Lulu opened higher for the day. The market gapped up for the day. And we know that gaps up to a new relative high do not present us with a good risk-reward profile from the long side. Why? Because there's a good chance that we'll see a gap reversal, and that's exactly what happened with follow-through and the market closing on its low of the day. So it wasn't just that Lulu had weakness, the whole market was pulling it back in. And once it found support, it had no problem grinding back. So if we go back to the 15-minute chart and we go right back in here, you can see how it participated in that market decline. Okay, it had a nasty little day, but the next day, right on the open, it puts in this long green candle. Well, if this were going to continue to go down, you wouldn't have seen buyers that anxious right out of the gate. So Lulu pulls back a little bit, and then it starts inching its way higher and higher. And look at this, real relative strength. So By the time you get this buy signal in here, it's got a full head of steam closing on the high with good volume. Look at that volume coming in right there. That's the tell. So when you get this buy signal here, you're leaning on the D1 chart. You know that the stock pulled back because the market was weak. Now it's regaining its relative strength. You like that D1 chart. You're waiting for the entry point. You take your long position right here. And it turned out to be a really nice long. So now what do you do with that? Well, let's refresh what we're looking at here. Stock choppy, still moving higher. All right, well, why don't I take a look at the M15, and it's currently on a sell signal. Right click, create alert, go into your trade signals. Let's see if we can get another bite from this apple. M15, buy signal, add it, done. What'd that take me? 5 seconds? Maybe not even that. When I get that buy signal, I'm going to go in and do the same type of evaluation that I just showed you. And by the way, what's the market doing today? It's pulling back. Hey, the stock is holding up fairly well. So let's go into the S&P. Let's take a look at that chart. There you can see it's drifting lower. I believe it's going to continue to drift lower. Let's do a little market analysis. First, I also want to point out Harry's trade last week, LUNR, was also a decent pick. There were nice opportunities to make money on this stock as well. But again, you had to be a dip buyer. All right, so you wait for those dips and you have your entry point right in there. And let's see, last Wednesday, we've got, last Wednesday was right about in here for the live event. So you're looking to get long on any one of these dips like here, as long as you're seeing relative strength in the underlying stock. And here's another opportunity to get long right in here yesterday. Really nice gains in that. I like the D1 chart. Looks to me like a bullish flag starting to set up right here. There's your downward sloping trend line, breached the upside. You can see how nicely the stock has been able to hold that EMA 8. And it's right up against this high minus trend line. So if it can clear that and get through the high of the day today, I am going to set an alert at the high of the day today, or I'll put it right there. GTC, click, click. That alert is set. I would like to know if the stock can break out there. Since I'm also interested in buying dips on this, I'm going to use an M5 buy signal alert, and you can see how it's currently on an exit. So when it flips to a buy, there's your exit. When it flips to a buy, I'm going to be alerted. I'll evaluate it. We'll take a look, see what's going on. So what were the clues today that the market might be selling off? Well, let me zoom out just a little bit. We know that gaps down in an upward trending market are the best possible risk-reward profile for us. Why? Because gaps down in an uptrend are going to eventually establish support, and the risk of a gap fill and a gap reversal is very high, and you've got lots of room to fill in here. And typically, off of a market high, you are not going to gap down and form a top in that fashion. Most of the time, where you're going to start to see signs of selling pressure is on a gap up to a new all-time high. That is our worst probability scenario from a risk-reward standpoint, because a gap up, we want to join the long-term trend. If we gap up, we've got a lot of room on the downside for the market to retrace. So buying an opening gap up like that is a big mistake. And what happens is you start to get lots of selling pressure and lots of selling momentum on those gaps up. And that momentum feeds on itself until you have a gap fill. And ultimately that gap reversal often turns into a bearish trend day. That is a much more daunting pattern on a D1 chart, and that is typically how you see those tops form. Even those temporary short-term tops, if you go into a D1 chart, you'll see lots of these gap reversals, and they turn out to be very long red candles off of a relative high. That is your sign of selling pressure and that the market might be pulling back for a few days. Again, I can go back plenty of charts. There's another one right there. Gap up to a new relative high. Heavy selling the entire day. Gap reversal, and then you get your follow-through selling. So you're typically not going to see a gap down gain lots of traction and that all of a sudden overnight everybody is going to be fearful that the market's going to roll over. Gap up, much more dangerous situation. And we want to be trading from the long side because the trend is higher, okay? So when you have an uptrend like this and you have a gap down, you wait for support, you're looking for that gap reversal on that gap down, and as you start creeping in and filling in the gap, that momentum builds and you're joining the longer term trend. So the gaps down are our friend. And I mentioned that yesterday, and we're buying dips. So this was really nice. So we start getting into the day a little bit. We get about an hour in and we have a higher low, double bottom. We have a nice bullish 1OP cross here. So this entire bearish cycle did not produce a decline. So this is a decent entry point, and we can see that right here we've got the S&P finding support above VWAP. That's a great sign because every time the market tries to test it, buyers step up. They see this as a good entry point, and then the market takes off. Now today we had a little bit different scenario, and I cautioned members in the chat room about this. I said, listen, I'm not looking to buy the first pop into this gap. Not today. Why? Well, because we saw a gap down yesterday. So there was some selling pressure. Market closes near its high of the day, but then another gap down. Well, if buyers were that aggressive, why are we seeing back-to-back gaps down? We shouldn't be seeing that. We should have so many buyers lined up, especially after a healthy bounce yesterday, that we would expect the market to continue higher this morning, not gap down. So that's a red flag. Put yourself in the shoes of other traders. They're in this same mentality of buy the dip, buy the dip, buy the dip, buy the dip. Been conditioned to buy the dip. So they remember what happened yesterday, and they remembered how profitable they were buying this dip yesterday. Hey, when the market gaps down today, I'm going to buy this dip. Well, if I zoom out, and I showed a chart earlier in the chat room this morning right on the open, I would be careful with this even if we start to poke into this gap early, and here's why. We've already had one touch, two touches at this same horizontal support level, which was SPY 580.50. All right, so let's take a look at that. We get a little bit of a washout here. I had mentioned I'd like to see a nice substantial bounce, and we do get that, and we need to clear VWAP. So we got that part of it. So this is nice, but it's only two candles. It's not like I'd rather see 8 little green candles than 1 or 2 long green candles and then no follow through. So as this bearish cycle was completing in here, what I wanted to see was that we would make a higher low, double bottom, and that the SPY would preserve VWAP, and that half of that long green candle for sure was preserved, and that if we had any little retest like this, that this would actually finish as a bullish hammer above VWAP. That's a good sign because that tells you that they tried to nail it, but buyers came in, buy, 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 and they drive the price right back up above VWAP. If I saw that type of pattern on this bullish cycle right here, then I would be looking for follow through into this gap. And that would be a decent buy. The other possible scenario was that we get a little wimpy bounce that lures in some buyers, and then we test this support level. Let me zoom out so you can see it right in here, and we take it out. And we take it out because this is where the stops are going to be. This is where the sell stops are going to be. Buy low, sell high. So once support is formed there, you get another test of that support. Bye on support. Okay, we're long in here. Well, now that same mentality prevails that, hey, multiple support here. I'm going to buy here, and I'm going to put my stop just below this low so that I can keep my losses small and I can let my winners run, because that's what I've been taught to do. Well, the programs know what you're taught to do, so they love to see you buy right in here, and then they pull the rug out from underneath you, and now you get a more legitimate, sustained sell-off that actually takes out that support level, and it flushes out those buyers right there. And so we're getting a little bit of a move down. Here's the clue that today could be a bearish trend day. We've been able to easily take out that support level. We've also tested another support level right here, and we've taken that out with ease. So we've taken out a couple different horizontal support levels. The volume is we've had a couple of little blips higher in here, but generally this volume is not very good. The tell for me is that the market's not able to get back and challenge VWAP. You can see how it never really gets close, and now we're starting to drift lower. Buyers today are like, what do I want to stick my neck out for? There's clearly momentum on the downside. I'm just going to hold off. There's no asset manager right now that feels like they are going to miss a year-end rally. Got too many news items pending. You got big earnings coming up next week. All the mega cap tech earnings are next week. Got Tesla after the close today. Next week we have ADP, Jolts, Challenger Grain Christmas, ISM Manufacturing, the jobs report. We also have the first look, the preliminary look at GDP. That means we're also going to get the PCE price deflator. Lots of news coming out next week. So with all the earnings and economic releases next week, there's not one asset manager at the all-time high that feels like they've got to be aggressive here. We also have, after next week, the election on Tuesday, and then we've got the FOMC statement on Thursday. Not Wednesday like typical, Thursday. And I believe the Fed rolled its meeting back because of the election. So we've got lots of news coming up in the next 2 weeks. No reason for asset managers to be aggressive buyers, but there's no real reason for there to be aggressive selling either. Traders are in a wait and see mode. If they get decent sustained selling pressure like this, they're going to continue to go with it, and the next day, boom, you could see a nice gap up and then continuation. For most traders, they're going to try and get cute, and they're going to look at this pattern, and they're going to go, the market is rolling over. I knew I wanted to get short, and then they'll have 100 reasons why they want to get short. And just about the time that you're starting to enter your short positions because you're pretty confident that this is going to gain some traction, blam! You get a breakout to a new all-time high. You have to cover your shorts for a big loss, and you were picking a top, so you feel like a fool, because a month later, you're going to look at a chart and go, oh my God, how could I have been such an idiot? The trend was clearly higher, and here I am trying to short, like right in here. Ooh, this looks bad. Ooh, look at how the market's starting to crown. Ooh, we're below AVWAP-Q. I think I'm going to take some short positions. Wink. Right up. Uh-oh. Now all my shorts are losing money. This trading thing's not so easy. If you just buy dips, if you just wait for support, you're going to be in really good shape, especially if you pick strong stocks that are breaking out on heavy volume. That's what you have to do. And there are going to be some days, just like the one we are seeing right now, where you know the patterns that you're looking for. It's like, okay, well, I was expecting to see this turn into a bullish hammer, higher low, bullish cycle right here. Ooh, I didn't get it. Okay, so I'm not trading. If I had small starter longs on good stocks, I'm going to exit them for maybe a small gain, maybe a scratch, maybe there's a tiny loss, but I'm getting out of the way. And now we make a new low of the day and we're kind of drifting lower. All I'm doing on a day like this is setting alerts just like the alerts that I just showed you. So there's nothing else to really do. And then you're going to wait, and you're going to wait for that day when you either get a gap down and then we grind back all day, or maybe we have a flat open, and all of a sudden as we start recovering this little dip, this tiny, tiny little speed bump, which is meaningless, absolutely meaningless in the grand scheme of things. There's no news behind it. It's just like a buyer's boycott, okay? They've just decided, I'm not going to be a buyer today. I saw a gap down yesterday. I got a gap down today. There's some selling pressure. We're at an all-time high. I'm not buying. I'm not interested. Got so much news coming up. I'll wait to see how the news plays out, and then I'll have more information to go off of if I'm going to start allocating large amounts of money to the market. That's the thought process right now, and we don't really have a lot of news between right now today and the next live event that we're going to do next Wednesday. There's just not a lot in between there. So that's all we're doing is buying dips. I'm focusing on strong stocks. I'm not even looking at the bearish side right now. There's no reason to. So what do we got? What could we possibly find on the bearish side that would look interesting to us? I'm going to run some searches. You'll see on the chart, these are the trade signals. I'm just going to go back and show you some trade signals on SPY. You can use them to help you stay on the right side of the market. Some of you will want to trade them using S&P futures. Look at the signal. If the entry point was good, you would have made money, but then you're managing your position. But you can imagine, well, what would have happened if I would have simply put a stop in to manage the position? So you get short here, you're probably putting a stop in at the high of the day because you're fairly close to it, and now you've got some decent traction on the downside. You enter here, you've got a nice entry point, you can put your stop in at your entry point or slightly above it, get this nice rally. Hey, bearish engulfing candle off of a high of the day. Should probably take gains in there. I'm just going to scroll back. That's not a good sell signal right there, meaning it didn't make money. You would have lost money on that trade. You would have lost money pretty quickly because you got this little bullish engulfing candle right after it. So you would want to stop out pretty much in here, definitely at VWAP. So yeah, you got a small loser there. I'm not real keen on taking late day trades, although there's about an hour left for that one, so not too bad. You've got a decent little sell in here that you could have made money on. And there's a nice little buy in there that you could have made money on. So all I'm doing is I'm just scrolling back and showing you some of these trade signals. We do have them for stocks also. Nice buy right in there, really nice buy. The blue arrow means exit. The red arrow means short. There's an awesome short right in there. Here's another bearish trend day, and you can see how the market can't get back to VWAP, falls short of VWAP. Okay, I can short with confidence here. And then you get nice follow through. Buy in there. You get the chance to make some money in there. Buy signal in there. Buy signal in here. That one, you're probably going to get stopped out for a scratch if you buy in here. As you're long in here, you got some nice profit. You're trying to let it run. Maybe this is going to continue. So yeah, put your stop in. Stop for a scratch. A little short in there. Nice long in there. So as you're looking at this, do you think you could have made money on some of these trade signals? If the answer is yes, then this is something you're going to want to check out. And I don't think I have any trade signals back farther than that right now. So trade signals on stocks, you're going to see them as well. And they let the runners win and they cut the losers short. So it's a dynamic type of indicator we can use to set these alerts. And so when we get an alert on a buy signal or a sell signal, we want to evaluate what's going on with the underlying stock and what's happening with the market. So let's flip through some stocks. Given my mentality right now, okay, I'm looking to buy dips. So if I've got a stock with a super big, strong breakout, it's going to pretty much have to be earnings related for me to want to take that trade, because I don't want to chase anything right now in this market. What I'd rather do is I'd rather be looking for a situation where I've got a really nice breakout, and then because of the price action today, maybe I've got a little bit of a dip in the stock, and that dip in the stock is related to what the market is doing. It's not so much related to underlying strength in that stock or bad news on that stock. Stock is simply following what the market's doing. I want to see those breakout levels hold. So was resistance, now support. That support is holding. The stock is not retracing much, if any, of its gains from recently. And that tells me that when the market gets back on track, this stock is going to lead the charge higher. That is how we need to be trading right now. And we need to temper our expectations, because we know during the course of the next week, there's not a lot of news coming out. After this next week, we start drinking water out of a fire hydrant, because the news is going to be heavy and it's going to be strong. We don't want to have a lot of swing risk exposure, because we're not going to guess what the outcome is going to be from all of these events. We're going to wait for the reaction. And if we get a nice technical breakout or breakdown, we're going to be able to trade it with confidence. That's how we're approaching the market right now. So let's go through and take a look at a couple of searches and see what I can find. I'm going to go into the D1 chart. I want to focus on the D1 chart. Again, I want to be buying stocks that have shown strength recently and that are holding up well during this market pullback. And I'm going to go back into the 5-minute chart so that we can kind of keep an eye on what the S&P is doing. And we know that we are in a bearish trend day right now. So we're looking at very small little bounces in here. We're going to have a bullish 1OP cross possibly during this recording. During that bullish cycle, we expect that the market won't do much of anything. It might try to challenge VWAP. If it does, but it doesn't go much above this point here, then we're going to have a nice potential entry point for a short when we get that bearish cross, okay? Very similar to what happened right here. You get this drop in here. You're in a bullish cycle, so you're expecting a little bit of a bounce in here. Look, we barely got any kind of bounce in here, and now we have a bearish cross. This would be a good entry point for a short. Ha-ha! Almost a bearish engulfing candle here. Yes, I think this is a good place for me to take a short position if you're trading the short side of the market. So, I mean, that's just the mentality of getting through this day. Again, for most of you, just focus on the long side. Go find some stocks that when the market is doing this, they're doing this. So, let's see what we got. We got DJT. Obviously, you know, this is Trump social media, so could be a lot of noise related to the election. This is a nice trend line here that's been breached to the upside. You've got a breakout above the 100-day moving average, and today the 200-day moving average. mean, this is a nice move. It's got decent volume. It's a volatile stock to say the least. I'm not going to be highlighting this as a pick of the day. You can see that it's been able to hold up well while the market has been selling off. So that's a pretty good sign, but I'm not looking to trade this stock. X is actually a stock that I highlighted yesterday in the chat room, and it was right at about this level here. Test of VWAP, and then the stock was able to grind higher. Why did I like this stock? Let's take a look at the D1. Let's really zoom in on it. Do I like it here? It would have to be above the 200-day moving average. Right click, create alert. Select the drop down, SMA, 200-day. Let me know when it's above it, add it, save it, move on. There's no trade for us here, but I did like it here yesterday. You see this bullish hammer? That was not a bullish hammer yesterday when I highlighted the stock. So this is a cup and handle formation with the stock trying to get through this lip, and it gets above the 100-day moving average and it holds that level. Test, test, test. Relative strength. So when the market was pulling back during some of these days, it was able to hold that 100-day moving average. Yesterday, the stock preserved half of this long green candle right there, and it bounced immediately. Never even got to the 100-day moving average. I liked that. And that's why I had mentioned it in the chat room yesterday. And I said, I think this is going to be a nice stock to trade. It had excellent strength the day before. Look at that relative strength. Look at that volume. Okay? These are the clues. You get a move like that on volume like that. This is a legitimate move. Okay? So then some of those gains are tested on the open. Remember that bullish hammer I showed you that would have been for yesterday? Well, look at how the stock reacts off of that low. Long green candle closing on its high on decent volume. Okay, well, that is the kind of support that I'm looking for that tells me that this stock wants to continue to move higher. And then today, you can see the follow through on it. X is not going to be my pick of the day on a long side because it's bumping up against that 200-day moving average. So I'm going to be looking for something a little bit different, something that is not too far out of the gate. Walmart, this is a nice little breakout in here, but you can see, yes, breakout. No. Yes, another, no. Yes, another break. No. I mean, this thing is filled with so many little false breakouts that every time you try and get long, yes, it's inching higher, but it's hard for me to get excited about Walmart right now when it's had this same pattern of false breakouts and little pullbacks. So I like it. I think Walmart's probably going to continue to move higher, but it's not the pattern I'm looking for. This is pretty nice. So you have this high minus breakout here. This is AT&T, and you can see that there were earnings before the open. Make sure you are checking the earnings calendar 5 times a day so that you know who's reporting after the close, who's reporting before the open, who's reporting this week. Do I have any stocks that could be tangential plays, meaning that there's another company that's very similar in nature that is posting earnings? This is a time to be on high alert. And if you do that, you are going to prevent any big mistakes. You're not going to get blindsided, and you're going to find some really nice trading opportunities. Okay? So make sure, and we've got many ways. We have at least 6, 7 different ways in Option Stalker Pro to know when earnings are being released. And so the B tells us that there were earnings before the open, but you're going to see an E for most charts that I flip through. So let's go to another one. I do like this chart right in here. Okay, so fairly choppy stock. AT&T does not typically make big moves. We'll take a look at the 5-minute chart. And you can see this nice, steady grind higher when the market is selling off. Good volume post earnings. We would expect that. So what do I do with this? Well, I want to buy dips, okay? I can't be any more clear about it than that. I just want to buy dips. But what if it doesn't dip? I'm going to even go with a 15-minute, okay? Because the stock tends to be a little choppy, so I'm going to go with a 15-minute. Let's see if a 15-minute is on a buy signal. It is. So it's going to have to go to an exit signal and then a buy signal. That would be fine. But with a stock like this, that's all I want to do is I want to buy dips. It's showing me strength. I like the D1. It looks like it's going to break out to a new high. And based on the character of that dip, what do I want to see? How do I know if it's a dip or a drop? Well, if it's a dip, it's going to preserve almost all of that long green candle. Why? Because buyers are lined up. They are dying to get into this stock. Okay? That's why half of the long green candle is preserved, because they are aggressively buying any dip. If you get a long red candle that retraces all of this long green candle, well, gee whiz, I guess that was one gigantic head fake, because buyers were not interested in it at all. In this case, they are interested in it, and I believe that that candle is going to be preserved, and you've got this breakout above this high minus trend line. Yes, it's bumping up against that high plus trend line, and that comes all the way back here, so that's significant. That's a significant resistance level. So if I buy a dip, and it's pretty small in here, then I can feel comfortable that on the next effort is going to try and take out that high of the day. And I want to see it attack it with a decent market tailwind, and I want to see it blow through it. If it does, not only will I hold the position, I will add to it. As long as the market still looks pretty decent. Could be my pick of the day. Choppy in here, preserving that long green candle, kind of the halfway point, although it did test the open of it. There's nothing really here for me with this type of trend line resistance in here. F. Got this trend line to get through, got the 100-day. So this was all on green royal flush. Now I'm just going to start going through some searches and taking a look at what might be setting up today. I'm looking for stocks that have lots of green dots. We've already looked at X, DJT, T. I'm just going down the list, okay? You see how easy it is visually for me to understand what's happening with the stock? These are the trade signals across multiple time frames from D1 to M5. So what I want to see, and this is relative strength across every time frame, and you can see a sea of green across the board. I know just by the nature of this search that these are going to be good stocks. If I see a sea of green across every column, I have just found an excellent candidate. IONQ. I like this. Okay, this is nice. This is a good liftoff, but this is a parabolic move that's distancing itself from the EMA 8. Okay, I want to buy a pullback, and we can see that this is happening on heavy volume. What's the M15 look like? It's still on a buy signal. So on an M15 basis, I'd like to get a exit signal, which you could be coming up on, and then another buy signal. M15 trade signal, like to see it on a buy. When that happens, please let me know, save it. But wait a minute, Pete, it's already on a buy. Yes, it is, and our servers know that. So our servers know that by nature, when I'm sending an alert like that where the condition is already true, it needs to go false, and then it needs to go true again. And when that happens, I'll get a buy signal, and I'll be able to evaluate the depth and duration of the dip, and I'll be able to decide if that is a good entry point. So if a day or 2 or 3 elapse, I don't care, because I'm just going to go about my business and I'm going to find other great stocks to set alerts on. When I get the alert, I'm going to evaluate it. So that's all I'm doing right now, and I really do like this, but it has to be purchased on a dip, especially after a parabolic move like that. And if you're ever in a stock that has a parabolic move like this, what I look for is a bearish hammer like that would be one that I would consider taking profits on. The other is a gap up and a long bearish engulfing candle. That for sure I would take profits on, because that's your gap up to a new high and a gap reversal, just like we talked about earlier today. And by the way, if you're watching what's happening to the market right now, drift, drift, drift lower. So this is a really good day. Hey, these down days, by the way, if you're in a buy the dip mentality, buy the dip, buy the dip, buy the dip, I got to wait for support. I don't have support. I'm not doing any trading today. The mental aspect of this, a lot of traders will think, oh, woe is me. I'm not trading today. I can't make any money today. Your mentality should be, I didn't make any mistakes today. I didn't get long in this downtrend. I've been patient. I'm waiting to buy dips. And when this market turns around, I'm going to make a lot of money. I'll make up for the trades that I didn't do today and then some, because I'll be joining that longer term uptrend. I'll have lots of decent volume. I'll have lots of good stocks that I've set alerts on that are triggering, and I'll be able to take that trade with confidence. And along the way, there's a possibility that the market might even run up to a new all-time high, as some of those shorts, some of those top pickers, as they get flushed out and they have to cover their shorts, whoosh, they're going to fuel the move higher. So don't be sad that you can't trade on a day like this. Be glad that you're going to be able to identify relative strength more easily, and that when the market turns around, those stocks are going to present you with lots of opportunities to make money on the upside. So I do like that stock. It's just a little too far ahead of itself. PAAS is a precious metals company, so I'm not as interested in that. You know, let's go in and let's just run a custom search. Okay, I could go through all these today. I'm just not that interested in anything that I currently see. So let's run a custom search. That's good exercise anyway. Well, first of all, I want to have good option liquidity, for crying out loud. Relative volume. Show me a stock that's got some good dang relative volume today. So that's always a good criteria to have. Run your scan. Hey, there are a lot of stocks to pick from. How about some relative strength? The market's going down, 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 down. How about a stock that might have some relative strength, even maybe on a 30-minute basis or so? So let's see if we can find something like that. Go in, relative strength versus the market. Okay, well, our list just got shorter. See, we're just casting a wide net and drawing it in. So what else might we want to see? How about if the stock is currently on, maybe an H1 buy signal. Let's see what that yields. All right, that's pretty good. Maybe an H1 and an M30. Okay. These stocks are probably going to be pretty dang strong. Is there a chance that there's a stock above the prior day's high? This would be a very restrictive search variable, because not many stocks are going to be above the prior day's high when the market is gapped down and we're having a bearish trend day. So I'm expecting that there's not going to be much of anything returned here. And there's not. There's a couple, I don't know, a lot of these stocks, Kroger, yeah. So let's not do that. Let's go through and let's take a look. Maybe we can tighten this up a little bit, find even more liquid options. All right, this isn't a bad list. CPNG, I'll look at that one. Take a look at that D1. Okay, so you got a little bit of a bullish flag here, but look at that reversal off of that automated trend line. That is a high plus trend line. DJT we looked at, grab. That's a cheap little stock, a $4 stock. I like the breakout here, so that's kind of nice. Take a look at the 5-minute. It's retracing a bit. Not overly interested. The next one is IONQ. We already looked at that. JOBY. That's nice. Okay, I like that volume right in there. And then it compresses. Today it's been able to hold its relative strength. Let's look at the D1. It's a $6 stock that is choppy as hell. I'm not real interested in that. KCG is next. That is a gold stock. Kinross Gold, I think. KR. Still trying to get through this resistance, so there's nothing there for me. Microsoft. Microsoft. There's the E I had mentioned. 1030. I wanted to see that 100-day moving average preserved. So that is the kind of breakout that I would like. But I'd like to see that preserved better than it currently is, because the 200-day AVWAP-E, the 50-day, all converging right in here. And then yesterday, we have a big, long green candle right up to the 100-day moving average. Why is the stock down today? The market. How well has the stock held up today? Pretty dang well. I mean, there was the low of the day until this last little drop right in here. This stock has held up really well. Look at this. That's some nice stuff yesterday. Look at that strength. Look at those nice long green candles. That is institutional buying. Look at this strength early today. See? Relative strength all day long. All right, so what do I do with this? Well, there's a few things I can do. Number one, let's set a bunch of alerts on this thing, because I think I've got a good one in here. All right, so we're going to do trade signal. Right now on M5 is on a sell signal. I want a buy signal. So let's set that. Let's right click. Create alert. Go down. VWAP. I want to see the stock above VWAP. Save that baby. Cool. Right click. Create alert. SMA. And I know this because I just looked at the chart. SMA above the 100-day. Set that alert. Now I have 3 different kinds of alerts on Microsoft. If any of them go off and they report earnings next Wednesday, yes, on the 30th. So, yes, that's 7 days from now. So I believe Wednesday after the close. Yes, if Microsoft can get above the 100-day moving average, I saw some really nice strength off of these major moving averages yesterday. The stock has been holding its relative strength pretty well until just recently. Okay, so this move right here, it started to falter a bit. If it can get above that 100-day moving average heading into earnings, I really like it. So I've got my alerts set. This could be the pick of the day. I like that heavy volume. X, like I said, could be as well, but it would have to get above that 200-day moving average and stay above that 200-day moving average. I do like that. Let's see if we've got anything else on the search that I ran. P8AS we've already looked at. PCG. No, it's utility. RGTI. I don't know. It's a $1 stock. That's another stock that I could have whittled out. Price. I want to see at least a $10 stock, okay? I don't want to be looking at $1 stocks in here. So I could set that parameter. In the chat, before I did the recorded event right now, I did have someone ask if they can check for volatility. You can check for the volatility today as a percentage of the stock. So we take the 20-day ATR and we divide that by the stock price. And so if you've got a stock volatility of 3.5%, that's fairly high. Anything above 4% is pretty volatile. Anything above 5%, so it has a 5% daily range, that's going to be a very volatile stock. So yes, you can absolutely search for volatility. And so we had Starbucks in here. Starbucks yesterday pre-announced. You can see the drop and the stock recovered the entire day. So they obviously kind of like that pre-announced earnings. We had AT&T, which also looks good. VRT starting to roll over just a little bit in here. I like the strength in here. It's below the EMA 8. Do you want to try and buy a dip on this stock based on the price action that you've seen so far? Let's go into the 15-minute. Sorry, this is getting a little lengthy, but I want to see what's going on. I want to show you the process that I'd be going through. Pretty heavy volume in here. It's had pretty decent relative strength in there. It's had good strength there. D1. It's not bad, okay? So I'm going to look at M30 and see if this stock will pull back just a little bit more. And it's currently was on an M30 buy signal up there. So I want to see it go to an exit somewhere down in here and then on a buy. Maybe I'd consider it, but I'd like to see this support level right around the 107 level hold. Not overly crazy about this particular stock, so I'm not even going to set an alert on it. WDC, fairly choppy on a 30-minute basis. There's just not a lot going on. The market's not doing a lot right now. I kind of like X in here. Yeah, okay, so I've got it whittled down. Zoom, trying to get through this horizontal resistance. I like Microsoft. Microsoft's got earnings coming up. It's had a tendency to perform well ahead of earnings. Here's Verizon up here. So we had strength in AT&T, and now Verizon is bouncing off of the 100-day moving average. Verizon is also post-earnings. You had earnings before the open. They did not like Verizon yesterday, but now it's getting a little help from AT&T. Let's look at the 5-minute chart, see what that's doing. That's pretty dang nice. That is some pretty good strength. It's in the gap, okay? Crosshair. It's in the gap. So it has that gap to fill. Okay, and it's just getting in the gap. So if I were looking for a day trade today with the market selling off hard, I'll first need to see support in the market. I know this is a bearish trend day. I'm not going to see any kind of market bounce until the last 30 minutes of trading, if then. So there's no hurry for me to take a bullish long position. Okay, no need to. But if I were looking to, I like Verizon in here if I had any type of market strength. So I'm going to watch it, and if the market is able to stop leaking oil today and it gets any kind of little late day bounce, Verizon might be the kind of stock that I buy for an overnight with the idea that from 42.30 to 43.60, I've got about $1.30 worth of price movement for it to come in and fill in this earnings gap. So that's how I would be trading it. I do like this relative strength here. You can see that when the stock dropped yesterday, it didn't keep going down. There were some buyers yesterday. So found support, now it's starting to grind higher. See, I'd watch it for a little bit of a move higher. Not my favorite kind of trade because I like to buy strength, not weakness, not bounces. So VZ is not going to be one that I highlighted. Microsoft is going to be your pick. Microsoft, I like it. I think it's going to do well into earnings next week. I like the strength that I saw in Microsoft yesterday, that volume coming in. I like the fact that the stock held up well today when the market was pulling back. I want to see half of this long green candle preserved in here. If I get that and I get a nice decent market bounce, could I nibble below that 100-day moving average? Yeah, I might. And then if we clear it with ease, then I would be adding. Obviously, if I can get through the opening from today, I would add again. And then I would make sure that I am out of this stock before it announces earnings next week, because we don't trade earnings. We don't hold over the earnings announcement. We trade before, we trade after, but during the earnings announcement, we'll let the dust settle, we'll let the implied volatilities implode, and then we look for our opportunity after earnings. So much news coming up over the course of the next 2 weeks. I know this got a little bit long, but I wanted to go through as many stocks as I possibly could since we weren't able to do the live event today. I'll be doing a recording on Sunday. Watch for our live event next Wednesday. Thank you so much for attending, everyone. We will see you then.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.